morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX Global, bringing you the morning comment for the 23rd of February. Carney may be questioned on Brexit risks. Bank of England Governor Carney will testify to Parliament today on monetary policy and the outlook of the UK economy. Following the latest developments on the Brexit referendum, lawmakers are likely to question him on how the Bank of England will respond to market volatility ahead of the vote and the scenario of a Brexit. The last time Carney spoke about the risks this uncertainty poses, he emphasized that large size of Britain's current account deficits and the possibility of a risk premium being attached to UK assets. Today, the governor may try his best not to get dragged into the in-out debate, but as the referendum date is sealed, lawmakers could back him into a corner in order to clarify the risks this poses to monetary policy. The tone of his comments could determine the pound's reaction, which has been under increased selling pressure since London Mayor voiced his official support for the out campaign. We expect that after this testimony, the pound's direction will continue to be dictated by the results of the incoming polls on the EU vote. The latest poll conducted after Friday's deal showed a slight preference for the UK to stay in the European Union. As for the indicators today, during the European Day, the German IFO survey for February is forecast to show that all three indices continue to decline for the third consecutive month. This would be in line with the ZEW survey for the same month, which showed that business confidence in Eurozone's growth engine continued to be dragged down by a weaker global economy. This could add further selling pressure to the common currency. Germany's final GDP for Q4 is already out, and the figure confirmed the initial estimate. In the US, existing home sales for January are expected to have fallen somewhat after rising sharply in December. Given the sharp increase in December, a modest decline in January appears more than normal to us. After all, the housing sector held strong in the fourth quarter of 2015, despite the sharp deceleration in economic growth during the quarter. Therefore, we believe that any negative impact on the dollar from a possible decline in existing home sales is likely to be short-lived. The S&P Case-Shiller House Price Index for December is also coming out. The Conference Board Consumer Confidence Index for February is expected to have declined from the previous month. This would be in line with the slide in the preliminary University of Michigan consumer sentiment for the same month. However, we believe that consumer confidence remains at healthy levels, albeit the recent global uncertainty and the collapse in equity markets worldwide. This was evident in the strong retail sales print for January, while January's personal spending, due to be out on Friday, is expected to show a similar gain. Here as well, we will treat any possible setbacks in the dollar as corrective moves of its recent recovery. Besides Bank of England Governor Mark Carney, we have four more speakers during the day. Fed Vice Chairman Stanley Fischer, Minneapolis Fed President Neel Kashkari, SNB Governor Thomas Jordan, and the Riksbank Governor Stefan Ingves. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX Global, wishing you solid trading.